This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. The United States is considering cracking down on Iranian oil sales to China as it braces for the possibility that Tehran may not return to nuclear talks or may adopt a harder line whenever it does, a U.S. official said. Washington told Beijing earlier this year its main aim was to revive compliance with the 2015 Iran nuclear deal and, assuming a timely return, there was no need to punish Chinese firms violating U.S. sanctions by buying Iranian crude, the official said. That stance is evolving given uncertainty about when Iran may resume indirect talks in Vienna and whether incoming Iranian President-elect Ebrahim Raisi is willing to pick up where the talks ended on June 20 or demands a fresh start.
Beijing's crackdown on the misuse of import quotas combined with the impact of high crude prices could see China's growth in oil imports sink to the lowest in 2 decades in 2021, despite an expected rise in refining rates in the second half. Shipments into the world's top crude importer and number 2 refiner could be steady, or increase by up to 2% to just over 11 million barrels per day, BPD, this year, consultancies Energy Aspects, Rystad Energy and Independent Commodity Intelligence Services, ICIS, found. That compares to an average annual import growth rate of 9.7% since 2015, and would be the slowest growth since 2001, China customs data showed.
Moving on to the top news in the energy sector.
Energy Transfer LP on Friday said it has already addressed most of the possible safety violations pertaining to the operation of the Dakota Access Pipeline, DAPL, raised by a federal regulator, and was working to resolve remaining issues. The U.S. Department of Transportation's Pipeline and Hazardous Materials Safety Administration, PHMSA, on Thursday put the company on notice for the probable violations and proposed a civil penalty against it. The letter we received from PHMSA contained the results of a standard audit that was completed in early 2019. All but one of the items identified have already been addressed. DAPL will address shortly the one remaining issue that PHMSA responded to for the first time this week, the company said in an emailed response.
Indian refiners' crude throughput in June was little changed from the previous month when it fell to multi-month lows as a severe second wave of coronavirus restrained demand, forcing refiners to reduce runs. Refiners processed 4.50 million barrels per day of crude oil in June, provisional government data showed on Friday. This compares with 4.49 million barrels per day, BPD, processed in May, which was the lowest since October 2020. Crude oil imports also fell to a 9-month low in June as refiners curtailed purchases amid higher fuel inventories due to low consumption and renewed lockdowns in the previous 2 months, data obtained from trade sources showed.
Next, we have the top news in metal markets.
Global steel production gained 11.6% year-on-year in June, but growth of 1.5% in top producer China was constrained by government efforts to curb emissions, which analysts expect to further cap output. Crude steel output rose to 167.9 million tons in June, World Steel Association data showed on Friday, although the percentage gain was flattered by a slump last year as a result of the COVID-19 pandemic. Compared to the previous month, average daily steel production worldwide fell by 0.5% in June, while Chinese production declined by 2.5%, said Kieran Clancy, assistant commodities economist at Capital Economics.
China on Friday launched an anti-dumping investigation into grain-oriented flat-rolled electrical steel imported from Japan, South Korea and the European Union following the expiry of tariffs in place for the last 5 years. Those tariffs will, however, be reinstated during the investigation, which is due to be completed within a year, China's Ministry of Commerce said. The probe comes after China Baoshan Iron and Steel and Unit of Beijing Shaogang petitioned the ministry in May, arguing that an end to the tariffs could lead to further dumping and hurt the domestic steel sector. We will now look at the top news in the agricultural sector. China's soybean imports are set to slow sharply in late 2021 from a record first-half tally, confounding expectations for sustained growth from the top global buyer and denting market sentiment just as U.S. farmers look to sell their new crop. A collapse in hog sector profitability and a sharp rise in wheat feed use are crimping demand in China, where imports this year may now be less than 100 million tons, compared with a recent U.S. forecast of 102 million tons. As China accounts for 60% of global soybean imports, its diminished appetite, just as U.S. farmers pull in what is projected to be their third largest harvest ever, stands to add further volatility to the critical crop, which rallied to 9-year highs this year.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.